Hey, my name's Christine Tillett. I have been an insurance agent in Washington State for over 23 years. And home insurance matters because owning a home is your biggest asset and you need protection for that. So I'm going to talk about homeowners basics. It's just the basic 101. Let's go into our slides here and we'll talk about it. So the first thing you're going to do is you're going to go get approved for a loan, find a home, and then find an insurance broker. After your offer is accepted, then you're going to obtain an insurance quote. Once I give you that quote, you're going to send that quote to your mortgage lender, and then the insurance agent works with your lender through the closing process, and the mortgage is paid in full for the year from closing. So you won't pay us, it's out of your closing costs. So what happens when you go to buy a home? They say you must have homeowner's policy insurance. It's the same thing, just different terminology, to get a loan from a federally backed mortgage company. Now, if you're just buying the home outright cash, you're not required to get insurance, but it's still a good idea. It's a good financial management tool. So your house is their collateral and they don't want to lose it to a fire or other catastrophe. So let's see what a homeowner's policy does for you and how you pick the right one. A homeowner's policy says that we'll pay for sudden and accidental direct physical loss or damage to the property, described in coverages A and B, except for what's excluded. Now we'll go over that later. Now, types of covered losses, also known as perils, it just means we will cover your home if fire, lightning, windstorm, hail, explosion, riot, aircraft, vehicle, smoke, vandalism, or theft. Those are common perils, but you will need to look at your policy to make sure all those things are covered. The most common uncovered losses are caused from maintenance issues, old roof, peeling paint, old plumbing in the house that just fails, pest damage. You probably want to get a pest inspection when you get your home inspection. Termites, rats, birds, they can destroy a home. And then you have flood insurance. Now, flood is not water coming from the inside of your home. It's water coming from the outside. So if the groundwater raises or you have a river or other body of water near you, that the water comes from the outside into your home. That is flood. And homeowners policies do not cover flood insurance. Earthquake. So if an earthquake shakes, crumbles, or mudslide, your home's not covered for these things. Theft of jewelry. A lot of people don't understand this, but most policies have a limitation of $1,500 per loss. So if they come in and steal your whole jewelry box or your wedding ring off your finger, the most they're going to cover is $1,500. Now, home insurance is an accident policy. It's not designed for maintenance. If you remember that, you won't have any problems going forward. Now, these items with the asterisks, these are additional coverages that can be added. You can buy a flood policy, earthquake policy, or extra coverage on your jewelry, watches, furs, and guns. So this is your declaration page. This is very general and very basic. When it says your declaration page, that's going to be like the basic stuff that your home is covered for. You'll also get a thick packet in the mail with it, and you'll only get that thick packet the first time. And then each year you'll only get a new declaration page, but that thick packet, you always want to save that, and that has all your definitions and exclusions, and you definitely want to hold on to that. So companies do a cost estimator. It's called a TCE or an RCE. We try to figure out the replacement cost of your dwelling. So you'll see here we have the dwelling coverage. So I'll put in things like your square footage, any of the features in your house, how many bedroom, how many bath, what type of flooring, and it's going to calculate what it thinks it costs to rebuild your house. Remember, the land's going to stay there, so we're not including the land. It's not what you could sell your house for, it's what it costs just to rebuild the house, the structure. So you'll see down here, coverage A is just your A, dwelling structure. And then we have B, private structure. All these numbers here are typically a percentage of this number here, and every company does them a little bit different. This company offered 20% in private structures, or sometimes you'll see it called other structures. That's your sheds, rock walls, fence, greenhouse, anything that's in your yard that's not attached to your dwelling. And then here you'll see personal property. That's sometimes 70%, but again, it's all different. So you can't lower these numbers that come with it, but you can increase it if it's not enough. So that's why you need to know what these numbers are for. So your C is your personal property, your couch, your dishes, your toothpaste, toilet paper, clothes, spices, everything. Anything that would fall out if you shook your house upside down. That would be your personal property. And then F is personal liability. People don't realize this, but now that you own a home, the Girl Scouts come knock on your door and your steps are icy and slippery and they get injured. They can sue you. Even though you didn't invite them on your property, you're still liable because it happened on your property. So, minimum I would recommend is $300,000, but any more with prices today, I would go up to $500,000 for liability. You can see the additional cost can be pretty minor in comparison to the rest of the policy. Then you have medical payments to others. So if somebody is on your property, let's say your friend comes over and they're helping you cook, well, and they slice their finger. Well, you didn't have anything to do with that. They didn't trip over a hose. It wasn't something that happened because of your house or your stuff. They just cut their finger. Well, when they go to the hospital, they may ask you to cover their medical bills because it happened at your house. So this has a limit of $1,000, $5,000. You can choose the limit. Myself, I don't like a huge number there because if somebody gets hurt and they want $1,000 for my policy, I would just rather pay it out of my pocket as a courtesy versus have a full-on claim. Now you have loss of use. Loss of use is if your house, let's say it burns down, you still have to pay your mortgage and you have nowhere to live. What are you going to do? This loss of use pays for renting a house, renting furniture, if you're in a hotel, the additional costs of food, whatever it may be. So if you're just out of your home for a couple days, it might be a hotel. If it's long term, they may rent a house for you, an Airbnb, something of that sort. Now we're going to go over to the next section. We're going to look at the dwelling coverage. So you saw back there, we thought it would cost $357,418 to rebuild your house. Well, that estimator is based on any given day. But as you guys know, and since COVID, that the cost to rebuild can fluctuate significantly. So there's this thing you'll see on your policy, building property loss settlement. It may not say that. You may just see something that says extended replacement cost, but you'll want to check with your agent to see what it is. And so what you're looking for, so that you sound intelligent when you talk to them, how we rebuild. You have a couple choices here. It looks like 4 choices. There's actual cash value, replacement cost, extended replacement cost, or you might see coverage A plus or guaranteed replacement cost with no cap. And what this does, so first one, it's the cost to rebuild minus depreciation. So if your roof is 15 years old and it's got a 20-year life, you're likely only going to get paid out about 25% of what it's going to cost to rebuild that roof. So it takes away depreciation. That is not the best policy to have. You at minimum want replacement cost, which is 2, cost to rebuild, and they'll go to that coverage A limit we saw on that last slide, that $357,000. That's the most they'll pay. It doesn't matter if it costs more to rebuild, that's the max. And you could be underinsured at any given time, so that's not a great policy either. The next option that's more common we have here is our cost to, right here, cost to rebuild, which is extended replacement cost. So sometimes you'll see, it'll say 20%, 25, 50%, or 100%. So that's just as it sounds. So if it costs $100,000 to rebuild your house, if you have a 20%, if you have 100% replacement cost, that means they'll pay $200,000 to rebuild. So it has a cap of how high it will go above there. Obviously, the higher the cap, the better it is for you. During COVID, I've seen people with 100% replacement cost and it still wasn't enough. So the higher the better in my opinion. And the best option that you can get out there is guaranteed replacement cost. It's no cap. So even if it costs $1 million to rebuild your house, they're going to do what it takes to get you back to where you were before the loss. And this is just your coverage A dwelling. Not every company offers that, but there are a few out there. Ask your agent if they don't have a company that offers that, what's the next best Then you have a deductible. Deductibles apply to each occurrence. So up here, you'll see we have the deductible. It's in lots of different places on your policy, so you might have to look, but it's always on that declaration page. So that means if something happens, you pay $1,000 out of pocket before we pay anything. And it applies to every occurrence. So let's say one day a tree falls on your house and it cuts off the corner, you're going to have a $1,000 deductible. And then a week later you have a windstorm and it rips off the roofing, and now you have another $1,000 deductible. It applies each occurrence, so each time something happens. Now the rating info, the many things they look at to rate your home can be credit, age, zip code, your protection class. How far away is a fire department? How far away is a fire hydrant? What's the fire department's response times? The biggest thing lately is the age of your roof. Companies do not want roofs that are over 20 years old. That can be different if you have something like tile or metal roof. But composition roofs, if it's older than 20 years, you're going to have trouble finding a policy. Some important things to remember when you're shopping for home insurance. Do you trust the agent you're working with? I mean, are they telling you things that don't align? You get that gut feeling? Call somebody else. It's okay. There's lots of agents out there. Have you checked with the Washington State Insurance Commissioner on the company that you're dealing with? Now, all the major companies, they're huge. The Allstates, the State Farms, they have millions of customers, so they're going to have complaints. There's just no way around it. But if you look deep into the complaints on what people are saying, are they saying they're just slow, or they don't like the answer that they're getting, or are they being declined? They're not responding. That's a big difference. So you want a company, you'll see it's called A-rated. It means they're a financially stable company and they're there to pay your claims. They're not going to disappear tomorrow most likely. So look at those things. When you're comparing, you're going to want to compare your dwelling limits, the deductibles, the replacement cost, and the liability limits. Those are easy things on that declaration page that you can see and compare. But it's never apples to apples, because I represent over 15 different companies, and I can tell you there are a few that handle things much smoother and easier. The coverage language is more broad. So it's kind of like the difference between Nordstrom's, Costco, or maybe a Walmart. So yeah, at Walmart you can get what you need, but are you getting the service you need? If you have a problem, are they there to support you like a Costco or a Nordstrom's would be? Difference. You see that? But sometimes you got to go with what's in your budget. I would check at least 2 different companies, as they're all different. I have some companies, their secret formula is how much to charge you. And so some companies may weigh heavier on credit, some may weigh heavier on the age of the home. So shop around. You just don't know. I always recommend to bundle your auto policy and ask for additional discounts. There are companies out there now, if you're not willing to bundle with your auto, they won't even write your home insurance. So definitely check around and see what it is with your auto. Even if you love your auto agent, it's worth shopping. I hope this information helped you understand the basics of your policy. Not every policy is the same, and not every agent is the same. If you need some help and you're in Washington State, Arizona, or Idaho, we are here to help you. We have a team, and we'll be happy to advise you in the best way that we can. I appreciate your time, and I hope you enjoy your new home, and congratulations.